If you are a swing trader and you are looking to get funded, then check out today's video sponsor, Ola Prime. Ola Prime has a challenge built deliberately for swing traders. Check this out. The Prime Challenge offers the ideal setup for swing traders with leverage up to 30 times. They also allow news trading. Weekend holding is also allowed. They offer up to 95% in rewards, and they have a 100% challenge fee refund available if you are able to complete the challenge. I know that a lot of people who watch these live streams tend to be more swing trader focused. So when looking for a partner to sponsor today's show, Ola Prime stood out as a perfect candidate. If you'd like to check out Ola Prime for yourself and get a live stream discount, then check this out. Simply use the promo code A1Live, that's A1Live, for 35% off any of their challenges. As always, make sure to do your own due diligence to see that this is in fact the right firm for you if you are looking to get funded. All the information will be now dropped in the live stream chat or in the description down below. Now back to the stream.
Good morning, everybody. Welcome back to another live stream. Hope you're doing well. We are looking at another down day here today. Stocks lower. S&P 500 is down 0.4%. It was down more than this just briefly ago. We are seeing a little bit of a bounce here at the start of the New York session. Dow Jones also down 0.4%. The Russell's down 0.5%. The DAX down. The FTSE's slightly up. The Nikkei's down. Hang Seng is down. So a little bit of risk off flow. We also have gold green on the day, which is unusual these days. We've been seeing gold sort of in free fall recently. And that, of course, has been brought on with the sudden surge in oil prices, leading to concerns that inflation is coming back. Today is a triple witching day, which, if you don't know what that means in the options world, it's the third Friday of the month, in which case monthly options expire on the same point of weekly options. And I think, is it also quarterlies closing? I think that's how that works. The point is, there's a lot of options that close today, and that can cause some very large swings in markets. Speaking of swings in markets, one of the biggest, most volatile components of this market right now is oil. I do continue to have a long position open. Duranto says, how's oil looking? Yeah, so my thought process on oil is it kind of remains a hedge in my account. There's so much geopolitical uncertainty going on right now. I know that you just get different stories every day. From the Trump administration, you are hearing that this war is going to come to a close. From the Iranians, it seems like things continue to escalate from, counterparties or other parties involved in the Middle East. There's a lot of stuff still going on. And even if the Strait of Hormuz sort of gets secured in the sense that oil starts flowing through it again, you still have, massive amounts of unease in the region. You have all sorts of missiles going everywhere, right? It's a terrifying thing. It's scary. And as long as that overhang is on the markets, specifically the oil market, the challenge is oil prices, until that stuff is to some extent resolved, it is hard to see oil coming back down and staying below 75. Now, of course, I don't know the future, and nobody here does. We could get, some sort of negotiation. But if you want to talk about the bear case for oil, like what gets oil like super bearish? Resolution, ceasefires, negotiations, conversations. You are hearing from the Trump administration an interesting dynamic, which is we are going to secure by force the region. And why you can see that has not caused oil prices to come down is that cool heads prevail is a theory that, like, okay, rational, calm, peaceful discussions, not war, etc., um, typically do win out in the long term. Because if we're just fighting fire with fire, what the market hears out of that is, okay, they're going to target energy reserves. They're going to target critical energy reservoirs and ways to get energy into the global. Like, it's not going to be missiles stop flying, right? Even if the Strait of Hormuz is secured by Israel, America, et cetera, or US. And so when you look at that, you say, okay, well, then it's hard to see why oil would come down dramatically. Oil comes down dramatically if, and in my opinion, only if, you have one of two scenarios. These are two extremes. The complete fall of the Iranian regime, in which case, I think oil would come down because the government there might change, et cetera. If that were to happen, I think that's a big if, but if it did, let's just put that. Part two to that is what I think would be more likely to happen, but also just a straight fall off in oil prices: peaceful conflict resolution, negotiations, discussions. And I don't have a stake in this. I don't have an opinion on which way I think it's going to go very much, because again, I'm not a geopolitics expert. I'm just a market trader. I'm staring at markets all day long. From history, you are not going to see a big fall off in oil prices as long as there is still agreed upon aggression, meaning there's still big fighting going on, right? Oil prices are going to be bid up. That premium is going to stay high for oil. Now, again, that could change, but I don't think that change comes from force. Most likely, I think the more likely scenarios, if you want to talk about a big bear case for oil, some sort of negotiations. I don't know if that's happening. I'm just pointing out the scenarios here. As a trader, people will ask all the time. Somebody asked me yesterday, hey, where can I get the best return for the next 5 years? Straightforward question. Unfortunately, I and no one else can give you a straightforward answer, because nobody knows with certainty what the market's going to do. Now, as a trader, you have to rewire your thinking. Like, go with me for a second. If you're a new trader, listen to this, because I know exactly what you search. I know exactly what you do as a new trader. I know exactly what you think about as a new trader, because I've been there. You're searching for strategies and systems that are going to help you better predict where the market's going to go next, so that you can buy and sell at the right times and make money, right? Sounds straightforward enough. It's a very logical approach to markets. What's the best entry method? How do I know which way the market's going to go win? And what I want you to think about, what I have come to realize after years of doing this, it's not about knowing how to predict which direction the market's going to go with supreme ability. It is about identifying scenarios in which the risk reward is good. So I'm long oil. Why? Do I have some sort of, let me be very clear. I don't have some sort of big, huge, bearish, doomsdayer perspective on what's happening in the Middle East. I don't. I really hope that it does resolve peacefully. Genuinely, I think that would be great. I'm not a big fan of war. I think most people are not a big fan of war. Putting that to the side, unfortunately, geopolitics are escalating. They are scary headlines, etc. We've been consolidating. We pulled back from the highs. But I think you have geopolitical tensions that could continue to spike oil prices. But I also see other reasons to be long oil. So what I can do as a trader, I don't know where oil is going to go with certainty, but I can stack things. I can say, okay, well, let me analyze some things. The jobs market data has been recently coming in okay. And remember, high level stuff here. Strong economies demand lots of oil. globally, if the economy is expanding, if it's growing, if we're, embarking on huge infrastructure build-outs globally, the demand for oil should remain elevated. And vice versa, if the economies of the world are crashing, the demand for oil goes down. Now, if you're going to trade oil, the two big things you have to think about is supply and demand. Well, currently, I just outlined that when we look at economic growth data out of the US, it's actually been pretty positive. Manufacturing PMIs, retail sales, services PMIs, consumer confidence, these statistics have shown a pretty bullish outlook for economic growth in the US. Okay? It's the biggest economy on earth. Where the US goes, typically world economies follow. Okay. So demand looks okay, right? Jobs market bias, mixed, but we have had some promising data. Not the non-farm payroll. I know people say, oh, we had terrible jobs. I get it. But we have to look at, like, in aggregate, the jobs market data. We've had some green lights, some red lights. So put that to the side. Inflation, not great. 2 years rising, this works against us. PPI was hot, this works against us. Oil prices, like rate cuts, because rate cuts is economic activity boosting, right? All that said and done, demand looks positive due to economic growth by a smidge, not a huge, massive, obvious economic boom going on, but decent. Okay. What about supply? Well, supply is under threat, right? We know that. The whole geopolitical conflict, tons of uncertainty with oil. So if supply is under threat and demand is escalating, if you are bearish on oil, then you are saying either the geopolitics have to settle and supply goes back up and it's perfectly fine. That's a bearish case. Or you think the economies of the world are going to really hurt, in which case the demand falls apart and oil falls. So I'm, for now, kind of just following the trend. Technical trend is still up, right? Plot your moving averages. I mean, if anything, it looks extended to the upside. But I still think that we could continue to see the path of least resistance is a blowout upside move on oil. Now, when I say path of least resistance, I'm talking about what we started this conversation about, which is risk reward. I don't know where oil is going to go with certainty, but I look at my indicators. I look at my set of evidence that I look at, the EdgeFinder, and I say, all right, if I'm wrong, I'm going to lose small. And if I'm right, I'm able to catch a really big runner. These are the types of moves, I always say this, that if you're somebody who fights trends, if you're a mean reversion trader, these are your worst enemies. You hate these moves, right? And there are strategies that I run where I don't like those types of moves either. I have an option strategy where I sell premium. And if you know anything about that, then you know massive volatility expansions are painful and not fun. So I do have a strategy that does not love those types of moves. But I also, my core momentum trading strategy loves these types of moves. So I am looking for a continuation in oil price. And if it doesn't happen, I risk small and I'm out. If it does happen, I'm going to try and catch a bigger winner to the upside. I hope that makes sense. But again, very much about identifying good risk reward scenarios, not about predicting what is going to happen perfectly. I think we have, from a technical basis, an upward trend, a support level, etc. And everything that I've said so far does not make me certain that oil is going to go up. I think this is just, I know I harp on this topic all the time. And if you're a regular, then you're like, Nick, I get it, bro. You say this all the time. Well, I say it all the time because I know there's new people funneling into my streams for the first time, or maybe they just started trading a few weeks ago. And it's a minefield out there. For my friends in the chat who have been trading for a long time, I imagine you know what I'm talking about. Nick, check Visa. Hey, Eisen, I actually took a trade on Visa. So if you want to explore my thought process on Visa, I've got a channel for you. I have a secondary YouTube channel. It's called Trader Nick Stocks. Just search that up on YouTube. I put out a video yesterday in which I talked about Visa, which I bought shares in. So what I did with Visa specifically is I went to Visa. I bought 100 shares of Visa. And what I also chose to do is I sold a covered call. So I went into my Visa or I went into my account. What I did is let's just filter Visa only for a second. I know it's hard to see. Let me make this bigger. Complete. Okay. I bought 100 shares of Visa, around $302 per share. And then I sold calls 29 days out for $1.49 per share. So that paid me $149 for shorting calls or selling calls, writing calls against my position. So I have upside, max upside. If Visa were to skyrocket in the next 1 month, the max profit that I would be able to make is $25 per share plus my $1.50, let's call it, in premium collected. So I can make $26.50. Or what I think is more likely, Visa might, I think the whole market's kind of challenged right now. So let's say Visa moves sideways. I can collect that income from selling the call and continue holding the shares. I'm not going to go into too much detail there because I know this is not really a stocks channel. So when I talk about stocks on my main channel, I've studied the analytics. Typically, people are not interested in stocks on this channel. Totally understand. We'll stick to indices, currencies, commodities on this one. But if you want stocks, Trader Nick Stocks, check it out on YouTube. It is my second channel, and I love trading stocks and options. So put to call doesn't look nice today on assets. Yeah, thanks for calling that out, Sluggy. Let's take a look at that. I have not checked the put call ratio today. This is a daily occurrence for me. Ooh, Sluggy, look at this. Huge drop off in the put call. We actually saw a big surge in call volume. That surprises me. So if you don't know what this indicator is, the put to call ratio, it's a really simple tool. It just looks at the weightings or the volume, I should say, calls versus puts in the financial markets. Man, I'm having fun today on stream. I got to say, I've been sick the last few days. You can still hear it. I'm probably 87% better now. I still have some nastiness going on, the cough, the congestion, etc. But I'm actually like yesterday was kind of hard for me streaming wise, but I'd do it for you guys. But today I feel good and I'm happy to be back on stream. So thanks for being here. So the put call ratio just looks at the puts, the volume of puts versus the volume of calls, and it gives us a ratio. I absolutely love this thing. It is so simple, but kind of captures the human psychology of markets. When you have this, or the human psychology that is built into markets, I should say. So let's look at yesterday's price action really quick. So this is up to date, yesterday's trading close. We saw the put call ratio actually go lower, surge in number of calls, right? So yesterday, we actually had a big surge in call volume. So that took place during this candle, right? So let's zoom in here and let's read the tape a little closer. So in yesterday's trading action on the S&P, the SPX specifically, there was a very big surge in call volume here. Now you might be saying, so does that mean that's bullish or does that mean that's bearish? And generally speaking, the studies that I've done on this topic have been more suggestive of when you have a huge surge in call demand, From the crowd, it is more of a bearish signal. And when you have a huge surge in put demand, it is a bullish signal. Look at this. So 2 days ago, we had an extreme. March 18th, look at this. I mean, no surprise here, right? March 18th, puts were in demand. Now, even if you don't trade options, this stuff is super useful. If you trade gold, if you can do this on gold, by the way, we'll do it in a second. Puts, right? Huge demand for puts. People essentially very bearish on the stock market. And they got bearish. And then, of course, the market went lower the next day. However, huge demand for calls comes in on this day. So we're getting some whipsaw here. But how do I read this? Well, huge demand in calls going into a Friday, in which case holding over weekends has been more painful recently than helpful. Like you're not in recent weeks, most weekends have been a painful hold period. Like you've had gaps lower in risk assets and gaps higher in oil. So I look at this and say, okay, caution. That's my opinion. And I don't like being pessimistic on stocks. Like I'll tell you, my natural state is bullish stocks. Like I love buying stocks. I'm a believer in the long-term story. I still think the US is a place to invest personally, long-term. But I can't deny what's in front of me, right? Right now, well, first of all, from a sentiment ratio today, we had a lot of bullish call action yesterday. So I'm very much skeptical that on triple witching day, as we discussed earlier, triple witching day, if you didn't tune into the conversation, is the third Friday of the month, in which case monthly options expire, weekly options obviously expire on Fridays, and I believe quarterlies. Is that, somebody correct me on that, but a lot of options close on this Friday. Now, a lot of options closing, market makers are all there in the options market. Even my friend Chris Pulver comes on the stream. That dude's a market maker, okay? Market makers are not devious, sneaky devils. I mean, maybe some of them are. Chris Pulver, I don't know about that guy. But in all seriousness, market makers are just people who, they play market maker in the sense that they're selling options, right? You can sell options. I sell options. I guess I'm a market maker too. So I'm a evil tyrant as well. We're not hunting your stops. Trust me. I mean, certainly not me, but maybe some bigger people than I am, but we don't really care necessarily about, making every sort of predictive move. Retail is more in the business of making big lottery ticket style, bets on where the market's going to go. Institutions, option sellers are heavily just in favor of kind of whipsawing back and forth and catching profits in both directions. And that's not speculation. It's just selling options is a bigger capital for most people style of trading. It is also a lower beta way to hold risk assets. It's a way to hedge. It's a way to cap your, or I should say, collect income on strategy. So it's a very hedge fundy style of trading, is selling options. And so when you have, people like Chris Pulver come on, the dude literally manages money for people. So, he is all about that stuff. So anyways, let me go back. I wanted to also just discuss briefly this topic on, where was I? I was looking at S&P 500. Okay, so I'm still a little bit on the cautious side with stocks for a couple reasons. Crowd sentiment, as we just got done discussing, very short-term bullish. Although crowd sentiment overall is still pretty pessimistic on this market. I think this contrarian crowd sentiment signal is based off the put call, which is jumpy. And I like it that way, to be honest. Like, I don't necessarily want my crowd sentiment stuff to be too slow. I actually prefer it to be a little quick. Like, what I mean by that is the put call ratio can jump around quite a bit. Like we just got done discussing. We went ultra short-term bears a couple days back to now crowd sentiment jumping to the bull side. However, there's also slower sentiment surveys, and this is why it's all included in the EdgeFinder. I look at all this stuff. The investor sentiment survey is a slower weekly look at crowd sentiment. Also, can I ask you guys, let's do a hard, this is going to be fun actually. I'm really interested to see what you guys say on this. Everyone here, I'm going to say 95% of people in the audience right now are not purely technical traders. Like, to some extent, I'm willing to guess. I mean, if you're a purely technical trader, I don't know what you're doing here, because like 60% of my stream, I'm not even looking at a chart or a price action chart. I'm kidding. You're very welcome here as well, and I hope you learned something. But let me ask you guys this question. Give me in the chat. We obviously talk about the 3 prongs on this channel a lot. Everyone who comes on here, except for Miko. Miko's just a technical specialist. I like his technicals a lot. Everyone else that comes on the show uses a combination of the 3 categories here: TA, FA, and SA. Technical analysis, fundamental analysis, and sentiment analysis. Let me ask you guys, let's take away technicals, because I can assume, I'm just going to make the assumption that most people here are not purely technical traders. Between these two, if you could only use one, which one you choosing? Give me an FA for fundamental analysis or an SA for sentiment analysis. This includes things like tracking institutional activity, tracking crowd sentiment, tracking options flows, put to call ratios, etc. Fundamental analysis. This includes looking at inflation, jobs market statistics, and economic growth metrics to build a bias on the macro. Which one you choosing? FA or SA? Okay, this is more tilted than I thought. My people, you guys are choosing the one I'm choosing too. But it's not by a massive long shot. FA is getting chosen hardcore in the chat. There are some SA people in the chat, sentiment analysis, but you guys are choosing fundamentals. So I am definitely, you know what the cool part is? You know what the best part is? I think both of these are super valuable and super undervalued in the retail trading space. The best part is you don't have to choose. You can use both. That being said, I would also, if I had to choose just one, it would be fundamentals, because fundamentals to me, it's just cut the nonsense. Like, less than 0.1% of the population is looking at technical analysis, and 100% of the population on Earth cares about fundamental analysis. Don't believe me? You don't believe me? Okay. Does everyone on Earth care about the prices of grocery stores, gas prices? Do they care about the type of society that they live in? Do they care about the leadership that they live in? The culture that they live in? I mean, fundamentals, they're impactful to everyone on Earth. I guess maybe there's some like native tribes that have no care for fundamental analysis. Of course, I'm not talking about fundamental analysis in the sense of placing trades based on fundamentals, but everyone on Earth feels fundamental analysis. And so that feeling, that collective exposure to what's happening in the economies of the world is reflected in the story of price action and charts. Technicals, the reason I have a hard time saying everything is technical is because who cares about technical analysis on the broad scheme? Like 0.1% of the global population. Most people are not staring at candlestick charts. Trust me, like most people don't have the time to do that, right? So fundamentals are a real force, like an everyone force. I was 100% technical analysis, but now I'm 70% technical and 30% fundamental. I'm learning from you and hope to be 70 to 80% fundamentals in the future. That's why I purchased the EdgeFinder. Appreciate you, my friend. I hope it helps. Hey, let me do something. So we're going to give a last call on this, and then I got to throw it over to my good friend James Lane. He's going to be taking over the stream for a little bit. Hey, we're doing a giveaway for the EdgeFinder this week. Technically, today is the last day. In, let's call it an hour, we'll be selecting a winner to get access to EdgeFinder completely for free. So we did an EdgeFinder giveaway. If you're not in the Telegram, you could be the lucky last call person that joins the group and enters the giveaway, and maybe you win today. So if you want a chance to win a free copy of EdgeFinder and start scanning markets with the tools that our team has built over the last few years, we're coming up, by the way, guys, hard to believe this, 4 years since we launched the EdgeFinder, coming up in April. So very exciting stuff. If you don't have access to the EdgeFinder, join our Telegram channel. The reason I say that is because in the Telegram, we are doing a giveaway. If you click the pinned message, enter your name into the giveaway, and you might be the lucky winner. We'll be selecting one today and giving out a free copy of EdgeFinder to the lucky winner. So with that said, guys, up next, as I promised, James Lane, and he is also on the same wavelength, fundamentals, technicals, sentiment, and building an educated bias, not just off of pretty candlestick charts, but off of the real world stuff. Up next, James Lane, stay tuned. Hey, stream viewers, if you're outside of the United States, I have a cool offer I want to tell you guys about thanks to our partnered broker, 8cap. 8cap is currently offering the ability for new depositors to get access to our premium tool, the EdgeFinder, completely for free. Now, how this works is basically you create an account and deposit a certain amount of money into that account, and they will essentially buy the EdgeFinder on your behalf. So it's a win-win-win. They get a new client for a reputable brokerage, you get access to the EdgeFinder and a great brokerage to trade with, and you'll be supporting the show by signing up with 8cap. Now, here are the steps if you want to find out more about this specific offer, but make sure to follow them specifically as we list them out on the screen here. Step 1, navigate to a1trading.com/8cap. That's a1trading.com/8cap. Step 2 is to follow the instructions and to make sure you use the specific link on that screen to sign up for your new 8cap account. Step 3, complete the required deposit amounts and contact their team as instructed on the page. So if you're interested in finding out more about this offer, head over to a1trading.com/8cap, and we'll also be dropping the link to this down below in the live stream chat as we speak. Like I said, make sure to follow those instructions specifically if you'd like to get access to a free copy of the EdgeFinder if you meet the deposit requirements as listed on the website. Full information, like I said, can be found a1trading.com/8cap. Now back to the stream.
Hello. Happy Friday. Hope you're all well. Hope you're all having or have had a successful week in the markets. So to quickly follow on from what Nick was saying, I think once someone dives into the fundamental side of trading, once you start understanding, for the most part, the cause and effect. So the cause obviously would be, inflation or the labor market, the central bank, whatever it may be, and how that relates to the markets, what type of impact it has into the markets. Trading becomes so much more simple, and not simple in the way of, oh, this has happened, so I'm going to buy this, but simple in the way that you can see a data point change and you can see it reflect in the market. It's not like a technical analysis thing. It's not a case of, oh, this support might hold, we're going to have to just wait and see. The markets move on fundamentals. It's an absolute fact, and it kind of has to. There is no real debate. So it's much more simple in that way. It's a lot more complex to learn. Obviously, there's a lot of context and nuance and different things to understand on how they work together, how they might work against each other, those types of things. But once you understand that, trading is fantastic. And I think, as someone said in the chat, the EdgeFinder does make it much more easy because, to be honest with you, you don't really need to do that much work if you've got the EdgeFinder. It's a case of looking what's bullish, what's bearish. And then I would say if you've got the EdgeFinder, you 90% there. The only 10% really you've got to left to do is obviously 5%. Just make sure you're not buying a risk asset into a risk off market. Obviously understand the geopolitical side of things and the landscape there. And then whatever technicals you layer on top. Fundamentals are red pearl. You can never go back. That's absolutely right. Okay, so As I said yesterday, I'm not looking to place any new trades for this week. I'm just going to chill. We did see Aussie yen bounce back yesterday or early this morning. So yesterday we did see quite a large move in the markets. Actually, gold took a real hit. The yen caught a pretty strong bid. Not quite as much against Aussie yen. Obviously, the Australian dollar is very strong as it is. But we did see the yen catch a bid across the board. So this trade came pretty close to get stopped out. Not a huge deal. We're now back towards break even. But the nice thing is, as I mentioned yesterday, this is a positive swap market. So buyers are paid to hold long positions. So theoretically, I can just sit here for as long as I want to. You know, there's no rush unless it's actually stopped out. I'm essentially being paid to just sit and do nothing in this market. So as long as the fundamentals are still valid, which I think they will be for a significant period of time, I've got no problem holding. But yeah, I think, to be honest, one of the best things is that Nick is in this industry or in the community to share the fundamental side. I genuinely think there'd be a massive disconnect between what trading actually is and what it's portrayed as on social media if there wasn't some sort of pillar. And when I say that I know that sounds like a bit of a strange thing to say, but if you look at what a lot of social media people are, they've got massive followings and they push pretty much the same strategy. I think we all know what it is. There isn't really anyone with a large following that pushes and promotes the real side of trading, which is obviously risk management, multi-analysis or multi-pillar analysis, which is obviously sentiment, fundamental and technical. So I think it's great for people to have somewhere to go to see that type of stuff. Anyway, enough rambling. Let's actually have a look at some trades. Bossy, hello. Crypto Meat, you're right, sir. Sluggy, what are you saying? It's good to see you. Are you still watching Dollar CAD for next week? No, I don't think I've had any interest in Dollar CAD recently, just because of the strong oil prices and generally across the board, we're seeing central banks either hawkish or hold. So specifically with the Fed, I've just got no reason to trade Dollar CAD. Obviously, we've got oil that's providing upside pressure on the Canadian dollar. We've got the Fed that's on hold. That's obviously providing support for the dollar. And you can see that reflected in the market quite clearly here. Yes, we've had sort of fluctuations to the up and downside, but overall, there is no direction here. We are just sat sideways. So it's kind of reflecting exactly what I've just said. There is no direction here. That's warranted technically or fundamentally, in my opinion. The really cool thing is that this show has attracted a cohort of very genuine macro traders. Super thrilled about it. Yeah, it's a fantastic place. Naveen, happy Friday to you as well. Anthony, you want gold? We can take a look at gold. I haven't checked gold today actually, but it's not seeming promising. So what we were discussing yesterday on gold was actually the idea of potentially being short sellers. Now, I want to make very, very clear, I'm not going to be short selling gold. I've got no interest in being involved in the market, but I think the easiest direction, or the direction that makes the most sense, is to short. So yeah, the point we were making yesterday was a couple of different things. First of all, we've got yields up. Hold on. Yeah, so we've got 2-year yields up. So if you know what 2-year yields are generally used for, we can essentially just use that to then say, okay, most central banks are not, or the markets are not expecting the developed market central banks to be cutting rates. If anything, holding, maybe hiking, depending on the exact central bank. So we've got yields up, which is generally the opposite effect to gold. So if we've got yields up, we can generally, again, expect gold down. So we've got that idea. We've also then, of course, got the fact that the US dollar has been doing very well. It's still supported on this over a decade-long trend line. I know it's a little bit difficult to see, but realized I've got it here. The dollar here, obviously still respecting its trend line, has been catching a bid. So overall, what's the argument for gold to go to the upside? There isn't really any, and the US dollar individually is bullish, as we can see here on the EdgeFinder. So right now, gold has got nothing going on, which is why I would have to lean towards being a short seller. So with that said, what could we do? Well, there's two options here, really. You could either look for scalps, just short positions down to possibly this sort of low over here towards 4,485, give or take, and basically just trade into momentum. Or if you're looking for more of an intraday trade, I'd be looking for a bit of a correction to the upside, then potentially come back to the downside after that. Again, I'm not in favor of actually being a short seller. This is more if I had to pick a direction, it would be short. But in all honesty, I would be much more in favor of just staying away from gold and actually just going to silver and accumulating silver at discounted prices. I'm still very bullish on silver. Again, we mentioned this yesterday, actually, but the use case, where have my moving averages gone? That's strange. Hold on, let me just copy them over. Oh, they're there. Took a minute to load. So yeah, I think fundamentally, silver is still fine. And when I say fundamentally, I don't necessarily just mean the fundamental data that we see on the EdgeFinder, for example. I mean sort of the industrial side, the AI usage of silver. That aspect, I think, is still completely relevant, but yeah, it's more a case of just letting this market do what it needs to do, waiting for it to stabilize, if you will, or normalize, and then, yeah, possibly pick up some long positions for a long-term hold. I've made 1K because of you. Thanks for all the assets you provide to us, you and Nick with the team. That's fantastic. I'm very happy to hear that. That's why we're here. It's not to sell you dreams and hopes and all those types of things. I mean, as Nick said, everyone that comes on the show generally is aligned with what they or what they're trying to teach. It's all sort of real trading, at least. So, you know, hopefully that is benefiting people. Pound New Zealand long. Yes, I was actually briefly looking at that before I came on stream. So I don't really see anything just yet that can warrant an entry. I do really like this daily time frame, though. So I think what the easiest approach here would be, for the way I trade, of course, would be waiting for a break of this daily resistance, but I would actually go down to the H4 and I would be looking for the retest of this level to then trade up towards this previous high, somewhere around here. And that way we could also get a bit of a correction of this left side. It looks quite impulsive, whatever type of word you want to use, but it just looks like that type of price action that could do with a correction back to the upside, and then whatever happens after that. But Pound New Zealand is also bullish on the EdgeFinder right here with a score of 8. So again, very supportive. I think technically and fundamentally, it's a good trade, but it's just in terms of what could we do right now? Well, not really anything, because yes, we can wait for this break and retest, but until that happens, we're still stuck in this range. Although, yeah, I mean, you could kind of argue maybe slight upside here, but overall, nothing's going on. I just can't enter this right just yet anyway. New Zealand US dollar. Yes, I was actually ready to take a trade on that one, but again, I decided to stay away for the week, as I said I would do. But I've got it marked up right here. So it's actually pretty much perfect for an entry. Again, the only reason I'm not in this position right now is because I said I would take the rest of the week off, which is obviously what I'm going to do. But yeah, I mean, we've got a very clear change of trend. So we've gone from bullish into this bearish trend. We have had impulse, displacement, again, whatever you want to call it, doesn't really matter. But we draw the fib from the high of this to the low, and we see prices pulled back into our what I call a value zone, which is just between this 61.8 and the 50% fib level, and of course lines up with some previous structure around here. So I would have taken a short position. I really like the setup, and we're getting this very bearish reading on the EdgeFinder at -10. So to be honest, with this trade, all of the stars are aligned. The technicals are pretty much perfect for the way that I get into the market, my execution style. And the EdgeFinder has got a very strong reading of -10. So it's all round a fantastic idea as far as I'm concerned. But if you would like to learn more about the way I trade, it's basically just trading momentum. It's called the momentum strategy or the momentum model. It doesn't matter really. But if you want to learn that, which is basically identifying trends, waiting for pullbacks, using the EdgeFinder specifically to identify high quality trades, there's been a link dropped in the chat, and you can get that course completely for free. There is I think it's a 30-minute video and a PDF, no strings attached. Yes, I've been expecting Bank of England hawkishness, even euro and pound. I'm kind of bearish on the weekly. Yeah, I'm still bearish on the pound. The downside, well, not the downside, but I guess the sort of caveat, if you will, is the fact that obviously we've had a hawkish hold. In fact, it was quite a significantly hawkish hold yesterday. So I'm a little bit cautious about selling right now. I think if we can start seeing oil prices come down, de-escalation in the Middle East, then monitor what the situation is with the UK, we could then potentially start positioning short again. But for now, it's time to take a step back, in my opinion. So it's just one of those things, you know, when you start creating a bias, it's very easy to stay with that bias for too long. So I've been short, not actually short, but I've had my short bias on the pound since sort of September, November last year. And it's been very good. It's been quite valid for months, but now it's that time. It's like, okay, the data is slightly changed. The idea is not really what it once was. So now it's kind of time to step back and wait for developments. So moving on, what do we have? New Zealand dollar we've discussed. Aussie New Zealand is interesting. I don't think we have an entry here. Let's see. Yeah, not yet. So we've been looking at this one over the past couple of days, and I really like it. I still think it's a fantastic trade, but it's just very tricky to get into. So I don't mind the potential entry right here, maybe on a little bit of an aggressive approach, but as I was saying with, I can't remember what market it was. Oh, pound New Zealand. It's just this sort of aggressive, impulsive left side makes me a little bit uneasy about buying it right here. What I would rather see is either a full correction of this back into sort of towards the 200 moving average, and then we could buy on a moving average bounce, or maybe something like this where we pull back just a little bit further into this fib zone. That would also be quite nice. But you know, the trend is very aggressive. Are we going to get that? I don't know. I really, really don't know, which is why I've stayed away from this market, because first of all, it's very extended on higher time frames. We can see over here on the weekly, the RSI is overbought. The monthly, the RSI is also overbought. And in the quarterly time frame over here, which is 3-month period, the RSI is also becoming overbought technically. So I just think it's a little bit of a extended market, higher time frame. Lower time frame is very tricky to get in because there's just a lack of pullbacks. So yeah, it's frustrating. James, look at CAD retail sales miss. US dollar CAD is good longs if we pull back to the value zone. Yeah, that's the thing, that I'm just not really bothered about the fundamentals of the Canadian dollar right now. The way the markets work generally is you'll have fundamentals and monetary policy. That's sort of the top layer. You know, that's what we can look at to say, okay, the market is bullish, or this market's bearish, or at least very likely could be. But when we have geopolitical situations, like when oil is flying and there's a war in the Middle East, fundamentals actually don't matter because the markets are reacting off of the geopolitical front until that's completely priced in. Kind of like the Russia-Ukraine situation. Once it becomes priced in and quote unquote old news, that is still sort of the main forefront of what the markets are paying attention to right now. So I'm just not ready to sell the Canadian dollar until we see some sort of either de-escalation or no more escalations going forward. Does that make sense? How about euro dollar? Yeah, I still like euro dollar shorts. I think yesterday's move could get a bit of a correction. So even for intraday positions, I think possible shorts looking for a correction of this left side could be valid. Technically, I think there should be a fib pullback as well. Let's see. It's not actually. It's just missed it here. Let's see what the EdgeFinder is saying. So bearish reading on the EdgeFinder. This is still a decent entry, I would say. It's not the best, but there is an argument to be short here. I'm just trying to think out loud. So what do we have through here? Not too much. It's valid, but I wouldn't really be overly optimistic selling here. Again, for me, I'd be quite happy to just wait till Monday and see if there's a slightly better entry we could maybe get, whether we see a double top here or a slightly higher retracement towards the 200 moving average, whatever it may be. Yeah, that's kind of all I've got. Bearish, but just waiting. US 30. Let's see. I don't have anything on US 30 actually. In fact, I don't really have anything across any of the US markets at the moment. Let's see what's the EdgeFinder got. The EdgeFinder's bearish, actually. I didn't notice that, so maybe we could actually be looking for some shorts. So the daily's broken the 200 moving average, which is nice. This is a good confirmation that buyers haven't maintained a bid. So A daily 200 moving average typically can be looked at as a very good dynamic support, but it can also be used as a very good way to tell basically who's in control. So at this point, you can see we came down to this 200 moving average on the daily, very large rejection, a very aggressive rejection. Then buyers completely fail to hold any sort of reasonable price. Then sellers came in, again, buyers attempted to step in, and again, sellers took over and buyers just couldn't maintain. So maybe a little bit of what you would call over analysis, but it's just a case of reading a 200 daily moving average for what it is. If it can't hold support, then it's likely signaling that sellers are in control and we can possibly go lower. With that said, the H4 is bearish. So I think what we would ideally want to see is pretty much something like this. So a retest towards this low. So obviously we've got a high, we've got our bearish leg here, fib to the low, pull back, retest some of the structure, pull back into the fib zone and continuation lower. That could be quite a good idea. I'm not a huge fan of that one just because, as I said, this left side looks a little bit aggressive. So maybe we could see a bit of a higher price towards this 200 moving average and then continue lower. Either way, I think shorts are completely valid. Technicals and fundamentals are suggesting that. So that's kind of where I would lean. But right now, the technicals aren't super clear for me. Any idea on silver or gold? Yes, bearish on both at the moment. Short term, bearish. Personally, not looking to actually trade them. I would really rather wait to start buying silver at some lower prices. But for right now, I'm staying away. Do I trade DAX? I scalp DAX sometimes during the London session, but no, it's not. It's not something I really trade actively in terms of swing trades or anything. But it looks like it's having a very difficult time. The daily, this is actually a good example of what I was saying here with the 200 daily moving average. Same thing we saw on the Dow with this really strong rejection candle or this really strong bullish candle rejecting our 200 moving average. Then what do we see here? It's acting as a dynamic resistance, whereas it was previously support. So it's not about trading around it necessarily. It's just a way to look at the market and say, okay, well, if I'm bearish, what's the chart saying? Okay, the chart might be bearish as well. And the daily, again, this 200 daily moving average, nice resistance. Anyway, yes, I think clearly shorts are the play at the moment. In terms of actually getting an entry, there is nothing here for me, but I think that's probably the easiest way to go. Tell me something, James. I'm gonna execute a trade on New Zealand US dollar. Hold on, chat's moving too quick. Gonna execute a trade on New Zealand US dollar because it the best chance of selling. Well, will you set your take profit? That's a good question. Let's see. Where would I have a TP? I think if I was in a position, I would be looking for a take profit around this level here. So again, as I was mentioning, these aggressive candles generally do see a correction. So I'd be quite happy to trade into that low. And this is a little tip actually, and I've got no data to back this up, to be fair, but this is just something I've noticed throughout my trading experience. Rather than trying to trade into highs and lows directly, so for example right here, rather than taking the exact low of the low, what I like to do is actually target just above the low at sort of the bottom of this impulsive candle, and that way you can catch like most of the move. Sure, you might, if it does end up reaching the very low of the low, you might miss out on a couple of pips. But to be honest, it's just one of those little things that kind of increased my hit rate over time. So that's kind of what I would look for short term if it was just a standard swing trade. But if we go into the daily, we can also then see what the higher time frames are doing. If there's any larger targets we could go for. And no, actually, I think the level we chose is completely reasonable. So what we've got through here is very obviously a strong level of support. So I'd be quite happy to target the original level. And then maybe you could even look to buy this daily support if the fundamentals flip. But yeah, to answer your question, that's where I'd have to take profit. I mean, any trades? Yes, I mean, Aussie yen, and that's it. So far, really nothing going on. It's just been a mix of profit and drawdown right now, currently around break even. People getting in NU makes me worried. Well, we had the same thing, I think, was it the start of this week or last week, where we had everyone in pound dollar and euro dollar. Now it's New Zealand dollar. where would I look to buy silver? I don't have a level at the moment. I think really what I'd want to see first is the daily 200 get reached. So probably something maybe slightly lower, maybe something retesting this previous low over here, meet the daily 200 moving average, then I might take a small long position. But to be honest, I'm not really overly interested right now. It'd be a case of waiting for maybe the EdgeFinder to flip, maybe just waiting for a clear sign that downside momentum is slowing down, whatever it may be. I just need to wait for something that's a little bit more concrete. And so far, I don't have that catalyst just yet. Nasdaq sell until mid-month April. Okay. What happened to NZD is causing this change? What do you mean, Cycling Club? What change? Are we in NAS 100 shorts? TP, at which point do I enter? I think you're misunderstanding either something I've said or the stream. We're not in any positions. We're not. That's not what we do here. It's not a case of buy this, guys, sell this, and take profits here. I'm not in Nasdaq, but I've just noticed we are at a very, very nice level of support through here. And again, breaking this 200 moving average on the daily. So to be honest, I actually think being a short seller on the NAS does make sense. Although yesterday we were getting a bullish reading on Nasdaq, but I think it might have dropped off, which it seems to have done because I can't see it unless I'm being blind. So yeah, what I would quite like to target actually is the low over here. We've got a little bit of a gap. I'm not sure if this is a global gap or if this is just the chart broker gap, but I'd need to obviously check that. But if this is a true gap in the market, I think targeting that level could actually be quite fruitful. So to be honest, I think in this case, what I would need to see to actually execute short is, first of all, a flip on the EdgeFinder to tell me that the fundamentals for Nasdaq are bearish. Then I'd need to see the break of this level, some sort of retest, and then I could get short on a rejection of this level on the retest. I think that's the most reasonable technical entry. But yeah, we'd obviously need to monitor that one. Thoughts on Euro AUD? It's a good question. I'm fairly sure it's still a bearish market, but let's just see. Yeah, so I'm kind of done with the AUD idea for now. So yes, I think fundamentally it's still a very bullish currency, but I think the markets are just very stretched. I think we've priced in everything. I also think the idea that a lot of central banks are now on hold, it's just not as strong as it was. So if we were in a quote unquote normal market regime, I would still be trying to find shorts. But I think what we need to see on the daily really is a little bit more of a pullback or a deeper pullback to then maybe go lower from there. But if we look here, we've got the monthly time frame oversold. We've got the weekly time frame oversold. The daily is very stretched from the 200 moving average. So I'm just not a huge fan of being a short seller right now. I think we're kind of, the move's already happened. I think really what we need to see now is a correction or a pullback, and then we could start positioning shorts again, maybe. AUD USD, I also don't have a direction on this one. And we discussed this yesterday, but I think the market's agreeing. So yes, the Australian dollar is strong, but we're also seeing a strong US dollar. So the idea of trading AUD USD right now, in my opinion, is completely kind of missing the point of being a trader, to be perfectly honest with you, because you're trading two strong currencies against each other. What you really should be doing is looking to buy both currencies, but proxy through other currencies. Does that make sense? So AUD XXX or US dollar XXX, whatever it may be. But yeah, both of these currencies, in my opinion, right now are supported. So selling or buying doesn't make sense for me. James the Goat. Thanks, Tom. I appreciate it. What do you think for gold? Bearish. We did already cover gold, so if you want that, feel free to rewind. I've got to head off in a second. Let's watch future data points. Yes, we absolutely should. Right, so let me just quickly check who's on after me, and I can throw over the stream. So we've got the fantastic Alan Perez coming on the stream. Guys, don't go anywhere. You're in great hands with Alan. I'll speak to you all very soon. Enjoy the rest of your days and your weekend. Stay safe. Don't get margin called. And I'll see you all next week.
If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream, or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Good morning, everyone. Good to be back here. It is Friday today, and this week flew by really, really fast for me. I don't know about you guys, but it seems like the weeks have been just flying by. Seems like every day there is a lot of market volatility, a lot of action going on, and that just makes the day go by fast. But we'll go ahead and start off like I usually do here with the currency strength index here. I trade Forex mostly. That is my bread and butter. And I like to start the day off here when I'm doing my analysis and thinking about how I'm going to approach the day by looking at which currencies are strongest and weakest. Reason being is when you're trading currencies, you're trading in pairs, and the best moves most likely are due when you're pairing a super strong currency against a super weak currency or vice versa. So we'll go ahead and start off here today. Canadian dollar seems to be getting very bid up here, mostly likely due to the price of oil here elevated. You are seeing the US dollar here starting to creep up here following that Canadian dollar. And then on the weaker side of things, you do have the pound, you have the yen, and then you have your Aussie and your New Zealand dollar here starting to taper off here. But that's a good level here to kind of gauge at. Now, this thing can obviously flip like yesterday, actually. Yesterday, you were getting dollar bid up, things like that. And then all of a sudden, things started to flip around here. You saw dollar have a big crash, and you also saw, things like the euro dollar up, Kiwi dollar up, pound dollar up, all that good stuff. Reason being, though, we'll go ahead and talk about that, and we'll talk about what I think about, that moving forward. Excuse me, sorry. We did see, a lot of hawkish commentary coming out from central banks. And then you also saw some creative ways of allowing oil to pass through. One was a Russian license with the sanction that they got going on. Another was Karg Island. Essentially, the U.S. was looking to essentially maybe take over that island because that accounts for 90% of Iran's Russian exports. So there was a lot of things thrown up in the air. Obviously, nothing actually happened from that. So we did see, a quick bit up here on things against the dollar, and now you're starting to see a little bit of a taper off. My personal opinion, I don't think there's going to be too much upside. I think this is going to be one of those things where you fade that move. And so that's what I did. Yesterday, I went short the Kiwi dollar, similar to Nick. And I think Marco as well, which Marco will be joining me here shortly as well. Shorted the euro. That was one thing I was in already. Shorted euro, shorted the Kiwi, and I shorted Kiwi yen. So that's kind of my positioning so far. So I think this move will be faded. I know you guys have some questions in the comments, so we will definitely go ahead and address those here for you. So let's see. This is, I saw some comments, some requests on some pairs here. Let's see. Someone said this week is just shorts. Yeah, you know what? It seems like, every pop in equities is just a short to the downside here. This is interesting, right? Let's look at the equity chart. Let's look at the S&P 500 here. When the war started, right, when you initially tagged this level of support, the 6,500 level, you were met with immediate buyers. This was also where that 200-day moving average lies. So we traded into it and then immediately popped higher there. And, that could have been the opportunity for bulls to really take over and trade it to the upside. And at the moment that the markets were very resilient, but now you are seeing some bearish market territory, bearish market behavior, where you're just trending to the downside now, very, very, very slowly here. We are at this level of support, which I think is very important, that I think holds some significance, the 6,500 level. On a lower time frame, you are now trading below that 200-day moving average here in yellow. So you can see where we're holding above it. So we tagged it here, traded higher, tagged it here, traded higher, and now we are actually trading below it. So we've traded below it, tagged into it, and we have been consistently here for the past couple hours, trading below that 200-day moving average. So my thoughts on that, I think that if you get a decisive close today, below that 200-day moving average and below this 6,500 level of support, then the path of least resistance is to the downside. You can see here that move will be about 6% away. And I think that's a healthy pullback in the grand scheme of things. So I think that's what's happening right now. You are seeing some continued risk off trading. You can see that by obviously oil prices. Oil prices have been consolidating now for the betterment of a couple days now, but still they're trading within this 101 handle and $92 handle. And now you are pretty much range trading here. So it seems like the market is still trying to understand whether this is going to be a huge risk for the long term or a short-lived price hike in oil. I think, the way I lean to it is right now nothing has been solidified, nothing has been resolved. So I do think that oil stays bid above this 92 handle in the short term. Right now, obviously that can change, but that's just my personal opinion on that. So I do think that there is room for the equities to slide. You do have yields higher as well. So the US 2-year yield initially spiked lower on the day, and I made a post on the Discord because we did see that Russian license sanction thing get lifted, or that temporary license, and you saw yields just fall off a cliff, right? And that was pretty much happening while the dollar was falling as well. Now it seems like the yields have completely retraced that move. So I think that there is still some lift in the dollar index in the US dollar. So that's why I think my trades are still good for now. Now, obviously, if you see some continued, bond prices escalate or go higher there, then this will go down and dollar also will go down, and then I'll get stopped out. But for now, I think those are still good trades that we are in at the moment. All right, let's go ahead and see some new comments here. What's up, Alan? Any thoughts on the FTSE? No, not really. Can you explain pound's sharp move upwards? Yeah, so the pound, along with Europe, the EU, and the Kiwi dollar and the Australian dollar. So mostly yesterday, and I talked about this here right before I came on, I posted the two charts that I always do on the Telegram channel. So the two most important charts that you guys have to know from fundamental perspective, I posted them on here. And you can see this first paragraph here on the Kiwi. So the Kiwi caught a bid along with the other major currencies, as they were kind of flipping hawkish, right? So a lot of central banks were like, hey, this is if oil stays high for too long, we're going to have to raise interest rates to go ahead and fight that inflation. And so you saw a lift off into most major currency pairs against the dollar. However, I think that the story that overrides that, in my personal opinion, is that you do have countries like in the Eurozone and in the New Zealand dollar as well, that they have bad growth. So if you add high inflation on top of bad growth, that just makes the story even worse. So I think it was a short-term pop, and I do think that the move to the downside is the move that will be. So that's kind of why I'm positioned that way. So you asked about the pound, right? Why did it get that pop? Bank of England priced in, I believe it was 3 rate hikes. I can actually verify that here. So we go to rate probability, and we go to Bank of England. And yes, there is a 42% chance that there will be a rate hike in the next meeting. A lot of central banks push those rate hike, chances to May. So very, very soon, right? And so that's why you saw that big pop there. All right, let's see. EuroCAD, please. I'll go ahead and talk about that one. Alan, DXY 98.4 should get defended, right? From a macro outlook. I think so. I honestly think that this level right here, the support, we dipped below it, but, prices staying above or within this 99.500 level of support. In my personal opinion, if we get a close above that level, I think dollar just range bounds. Worst case scenario, dollar just range bounds into the 100.5 and 99.5. However, if you do get, something worsening, or this thing just, signs that this thing is going to be prolonged, then I do think that, we break 100.5. And then, if you just look at this from a longer term perspective, dollar has just been trading within this box here. You see these two red lines here, dollar index has just been trading within here. And from a technical perspective, you are seeing signs of a trend reversal. You are seeing these big moving average here. They're starting to cross over. You do have, dollar trading above that 200-day now consistently here. So I do think that there is a chance that, if this thing stays, or if oil stays higher for longer, then dollar index has a reason to go ahead and pop higher. And maybe we just, start tagging these upper levels here, thoughts for me: 100.2, 102 is the next one. Then you have 103, and then you have beyond that. That's obviously extreme levels there from. But I do think there's a chance that we trade higher. Okay, hawkish commentary from ECB and BOE. Yes, there was some hawkish commentary from pretty much every major central bank. Do you think that the Aussie pairs are not worth it? Well, I was actually seeing some very strong relative strength against the Aussie dollar, Christian. I went long the Aussie basket for a short period of time. It worked out phenomenal. I did go ahead and exit out of those positions the day before the Fed, and I think that was the good move there. I just didn't want to have that risk on the table, and you did see that the overall macro picture was somewhat weakening a little bit. What I can show you is if you go to the EdgeFinder and you look at the economic heat map for the Australian economy, you can see here that it was very, very well. And at one point, this was at 86%. So essentially meaning that most of the data expectations are coming out in favor for the Australian dollar. Now, the one thing that did shift was that unemployment rate, Christian. It did go ahead and tick higher, which is bad for the Aussie dollar. And so my reasoning, before all of this was Australian dollar is pretty resilient. They have elevated inflation. They need to hike rates. This and that. And so they were essentially, the RBA was hiking rates on an already somewhat strong economy relative to others. So that was given that relative outperformance. Now the Australian dollar is still range trading. It's still elevated, which is good. It's a good sign there. But I do think that, there is a chance that there could be other better pairs, right? Again, you want to find the absolute strongest against the absolute weakest and try to find that pair and trade those pairs. So I think the Aussie dollar here, the Australian dollar is strong and the US dollar is strong because it has that safe haven appetite for the US dollar. Maybe something like Aussie Swiss, which is one trade that I love. You can see here that Aussie Swiss relative to the Aussie dollar is holding up pretty nicely here. You see this consistent uptrend here. Aussie CAD pulling back here. This was another trade that I had. I took profits, but it's now starting to pull back here. So yeah, I think the Aussie dollar is still good. You just have to find it with the right counterpart. What's the website where you saw the interest rate decision? There's a couple ways you can go ahead and get that F10. You can just go to the Fed CME group to see the probabilities. But when it comes to making my decision and stuff like that, I usually just refer to the EdgeFinder because it updates the information as it comes in, and then it automatically compares it to other currencies and other stuff like that. So you get a good gauge as to how it impacted the overall outlook. So that's kind of what I do. If you want to know real-time updates, a free option you can do is Financial Juice. I like Financial Juice. It gives you all the stuff that you need to know. And you can see right here, traders price in 50% chance of Fed rate increase by October. Look at that. That's actually brand new. So let's go ahead and look at that. So I haven't refreshed this page too, by the way. So we're going to see the shift in real time here. CME Fed Watch Tool, the next rate cut was due, September of 2027. So during the meeting, during the FOMC meeting on Wednesday, how you doing, Marco?
Hello.
Hey, I'm going to go over this quick headline here to the viewers here. But during the meeting here on FOMC, the next rate cut was in December of 2026. By the end of that meeting, which was an hour-long conversation or less, rate cut odds shifted to, I believe it was July of 2027. Now they're September 2027. And now from Financial Juice, there is a chance that there's a hike in October of this year. So you can see how, markets were from, 2 rate cuts this year, then half a cut this year to no cuts this year. And now they're going into hike territory. You can see that by looking at the yields. You can see that the US 2-year yield is elevated here. So now you're starting to see, look at that pound dollar falling off a cliff here as you see those rate cut odds starting to shift in the direction that markets do not like. So you can see here pound dollars down, New Zealand dollars down, Euro dollars down, Aussie dollars down. So you can see that pretty consistent across the board there. Marco, good to have you here, man. It's always a good time talking to you. Anything new? Anything that has caught your eye or that you're trying to act on?
Yes, I wanted to show you. I did a little bit of research just using Google Gemini, and basically here are the times where the ECB hiked into an oil shock and what happened after that. So we have July 2008, July 2011, July 2022. Essentially, every single time that the ECB was in a hiking cycle into an oil shock, euro dollar actually ended up being lower. So that's kind of what gives this trade so much, let's say, power and steam behind it. Essentially, ECB being possibly not late to the party, but maybe reacting in a wrong way, where the oil shock will first hurt the GDP and the growth and the companies and the DAX, and then later on increase the actual inflation. So if you had to pick between the two, looking at just the past data, it seems like a better decision to hold or maybe even cut if you want to save the sort of the growth of the economy and the currency, meaning the euro. So this goes well in our favor for our positions.
Yeah, and if you could show this on your screen here, Marco, as far as the data, I did see that post that you put. It was in your journal, right?
Yeah.
2008, 2011, 2022. Yeah, that is completely valid. I was talking here as soon as I got onto my segment. Basically, a lot of currencies here went up against the dollar because you did have a lot of hawkish comments from most central banks. However, the underlying condition of most economies, or not most of them, but a good chunk of them, for example, like you said, in Europe, in the New Zealand economy, they do have what seems to be some weakening growth. And so maybe that short-term pop will be short-lived as far as that hawkish commentary, because then you have to really consider what that would do to a strong or a weak economy with very weak, GDP and growth and all that good stuff.
I'm sorry, I think I didn't have my screen shared. You couldn't see my screen, right?
Correct. Here, I'll go ahead and remove myself and add you up there.
Oh, sorry. So this is what I wanted to show you. Thank you, James, for the heads up. Essentially, so this is the table. July 2008, July 2011, July 2022. You have the initial price, and 2 months later, first minus 10%, minus 6.2, minus 5.8. If we go to 2008, for example, after the GFC, you will notice this, essentially. So just a big drop. And that's kind of what happened. So that's what I wanted to, that's the main thing I wanted to show you. Sorry about that. I forgot to share my screen. So
it's all good, Marco, but that is super interesting. So those are big drops too. Like 2008 was a 10% drop 2 months later. Is that
apparently so? Yeah. I mean, this is not 100% accurate, but it should be at least, I don't know, 60-70% accurate, and it should tell us that every single time it dropped, so the price sold off on euro dollar.
Yeah, I mean those are significant drops, and I don't dispute the data for sure. Like the data is the data, so that's very interesting, and a very strong confluence too. So I'm glad that you posted that, because I read that this morning here, and I was like nice. Speaking of big drops, gold and silver are dropping again today, like a rock, mostly probably due to the elevated yields that we're seeing. The short end of the curve is up 3.5%, and the 10-year yield's up 2.75%. I think that we might get to this 200-day moving average, or at least this 4,400 level of support here rather fast. Is that something that you're willing to pick up, or you're still staying away from that, freight train coming right at you?
So for me personally, when it comes to gold, it looks really bad at the moment. So it looks even worse than yesterday. I mean, but we just keep on selling off. And yeah, basically, if I can just flip to my screen, let's see this one, add this one. Okay. So essentially, I'm looking at possibly the 200 EMA on the daily. So let's take a look at that. Add another 0 here. So possibly 4,200, something like that. And I'm also looking at, of course, the EdgeFinder to turn for the EdgeFinder to turn bullish on gold. And right now, what is the reading? Let's check. It's probably going to be neutral.
Yeah, it's -2 at the moment.
-2. Mm-hmm. And I just wanted to mention, if you want to participate in the giveaway, I'll post the link to the giveaway form in the comment section right now. So let me post it here. Fill out the form, and then during my segment, we will do the giveaway. But if I can just flip your screen, or I'll put the screen back to you. I just want to open up something in my email.
Oh, sure. No worries.
Something concerning gold. Let me just try to dig it out.
So yeah, guys, you are seeing a significant drop in gold, and I know there's a lot of people here that trade gold that want to understand why. And for those that are tuning into the stream on a daily basis, you've heard this answer from me and probably other guest show hosts in different variations here. But essentially, gold is in fact a safe haven, and it definitely thrives in time of geopolitics and war and stuff like that. But in this case specifically, you do have the prospect of elevated global inflation, and a lot of central banks are looking to raise rates. And so, if you were an investor, for one, a lot of people are trying to just get cash, right? Because you're seeing equities drop here. Maybe that's an opportunity in the long term, whatever. But from an investor standpoint, imagine you have two options. One where you can invest in gold and get a safe haven, safe haven status or whatever. And the second option is you can get the dollar, which is safe haven status, but then you're also earning a high yield on top of that. And so the obvious choice is the second one there. And so that's why you're seeing, money flowing into the dollar consistently here while you see yields elevated. And you can see here the price action with, for example, this 2-year yield here, it's going right up there. And if you just look at gold, it's doing the quite opposite there. So there's a direct correlation to that. It's not by random. And I think a lot of people here are quite confused. And I was too initially. I was like, man, gold's not really doing much. It's because of that yield. So that's kind of pressuring gold. And for as long as you continue to see those yields elevated, most likely than not, you will start to see gold follow suit that in the opposite direction.
Yeah, let me show you the article that I dug up. So if I... okay, great. This is from Andrew Campbell. You can find him on Twitter. This is his article on the current sort of gold move lower, and 5 reasons. So dollar strength, pretty much dollar safe haven. Everyone wants dollars to be able to pay for example, oil, or pay for their debts if they have any debts. Higher rates. So central banks, most of them are looking to hike. Then you have scramble for liquidity. Essentially, people want to have currency on hand if they need to buy something, and gold is kind of the first thing to go. Then you have lack of Middle Eastern buying, because Dubai was the hotspot and was the pipeline for a lot of Asian countries to buy gold. So essentially, I think gold would flow from London to Dubai and then to other places. So now that Dubai is closed off, the pipeline has been broken. So it's going to take some time to fix it. That's why the demand cannot really be even executed. Demand cannot even be present for physical gold because Dubai is offline. And then you have an ugly chart. So technicals, reversion of speculative flows. This is something I don't really understand. But these 4 reasons are pretty significant. And one more you can add possibly is just money flowing out of the Middle East. People, it's tough to bring gold out of the Middle East because gold is huge if you want to bring gold bars. Cash, not the best solution, but maybe crypto. That's why we may have seen a bit of a push in Bitcoin when the war started. So possibly some money flowed into Bitcoin, and it's pretty easy to bring out the USB out of the country, let's say. Much easier than cash, much easier than gold. That's one crazy theory I saw on Twitter. But people are very much surprised that gold is selling off and it's not acting as a safe haven. For me, long term, it's an absolute buy, because inflation should be persistent in the future, especially with the oil shock, and that should bring gold up in value at the end of the day. And gold should start acting as a safe haven in the long term. So short term bearish, long term bullish. And the buy zones are which I personally mentioned. So 41, 4200. I think you're looking at the same thing, Alan, if I got that correct. And just we need the EdgeFinder confirmation. EdgeFinder saves you out of so much trouble. Just looking at the readings, so opening up the top setups, looking at what's bullish, what's neutral, what's bearish, and respecting that is going to save you from a lot of losses, and it's going to give you some pretty nice trades, some pretty nice winners. So that's your first line of defense. Just look at what the EdgeFinder is doing. I also wanted to comment on USD JPY, which is pretty much retracing the whole move that printed yesterday. So it looks like this was not even a sign of an intervention. This was just some selling into resistance, or possibly some panic selling because people were expecting an intervention. We are now pretty much close to break even on my position, close to the initial start of the drop. What's your take on this, Alan? And if we go above 160, will you be selling? I think you will, with sort of a small position, like a pro position.
Yes. So I did some homework. We were going to talk about the Kiwi dollar yesterday. And I didn't want to talk too much because I wanted to really filter out the trades that I wanted to take, similar to like I did with the Australian dollar, find the best picks, especially given the current time that we're in here. So I do think that, any yen depreciation, in this case, dollar yen, anything above 160, there is that risk of intervention. You just don't know when. So what I did yesterday was I selected my two pairs that I want to do, my two new trades that I did, which is short the Kiwi dollar. And I already have the euro dollar running. So this is just, brand new trades here that we're talking about. Kiwi dollar to the short side here. You can see here, if I go to a forward time frame, I was very, very close to getting taken out here. But now we're seeing this move retrace here as we see yields elevated in the US. But Kiwi dollar here short, and the other one was New Zealand dollar versus the yen to the downside. So essentially yesterday I saw that dollar yen move had already moved way past, and I didn't want to chase price. But then I looked at the Kiwi yen and I was like, okay, this is actually still not too far away. It was kind of consolidating here. So I went short this one. The reason being is that if I go to the EdgeFinder and just go to top setups page, and the Kiwi is very much weak. So you can see here that you see the New Zealand dollar here very bearish, so hence the original position. And then New Zealand yen is bearish as well, not as strong, but it's bearish as well. And I do think that if you do have a yen intervention, then the yen basket as a whole will go ahead and appreciate. And so I want to be in that trade where the yen is really, really strong and the Kiwi is already really weak. So that was my two pairs there that I wanted to go ahead and take to the short side.
Awesome. Yeah, and one more confirmation that we didn't even get a sign of an intervention is the yen strength didn't spill into anything. So you just showed me NJ, like there was no reaction. So looks like this move was purely isolated on USD JPY. If it was an actual intervention, like NJ would be flying. So NJ would just be sort of crashing lower with a lot of force, which didn't happen at all. So it's still kind of a no man's land on USD JPY, but I'm gonna keep holding my short for now. I think if we do keep on trickling up higher, I think it's definitely a good sell. One more intervention play I have is the Euro Swiss, which is in profit.
Awesome.
Some Euro strength yesterday, which was nice. I have an oil position as a buy, and Euro dollar I have sold, which is fortunately back to break even now. So that's good to see. And to be honest, I have pretty high conviction for selling EU at the moment. I think this could be a good one. So we're gonna have to see how it progresses next week probably. I don't think we're gonna get much today.
I'm right there with you. And I'll go ahead and leave out for my portion here of the segment. One thing I will say though is going go ahead and join that Telegram channel. There is a free giveaway. I believe today's the last day to enter, and you can get a copy of the EdgeFinder. EdgeFinder will go ahead and like we've said before, it will go ahead and take away from unnecessary losses that you absolutely don't need to experience. And it just elevates your trading experience. And if you don't get the EdgeFinder, well, at least you're joining the Telegram channel and you are up to date always with the latest things, markets here. So thank you, Marco, for the fantastic conversation. Seems like we're getting a risk off day. So we'll see if that continues. And if that does, then our positions do quite well.
Yep. And just, sorry, last question. So what's your take on the stock market at the moment?
Yeah, I think you're very vulnerable at the moment. You were trading when this thing first started, that initial conflict. You had like a buy the dip moment where the stock market, I'm looking at the S&P right now, it traded into the 6,500 level of support. And again, with that 200-day moving average, and it caught buyers there. And I think at that moment would have been the time where buyers step in and really take it higher. Now you are seeing some very clear, obvious bearish trend characteristics. Now you are, if I go to the 4-hour time frame, you do see, we were basically bouncing off of that 200-day moving average. You traded here higher, boom, bounce higher. Now within the last couple of hours, you are trading right below that 200-day moving average here in yellow. And I think if that stays firm, along with a closure within this lower end of this level of support here, I think there is a real risk, a most likely chance that this stock market starts to roll over. And I think the next level would be the 6,200 handle, just by looking left here on a technical basis.
Yeah, I agree. And I think a lot of people that I'm following and watching are bearish stocks for the upcoming 2 weeks. I believe that's sort of the forecast. So next 2 weeks could be pretty problematic. We are positioned for risk off through, for example, selling EU and those kind of positions. So hopefully, we'll see what happens. So thank you, Alan. Thank you, Alan, very much for doing this joint segment. I'm looking forward to speaking with you next week. And will you be closing anything into the weekend, or just let it run?
I'm gonna let it run. Most positions are near break even or just shy into the profit there. So I'm gonna let it run. Last week, nothing really happened over the weekend. And I have, this time around, my stop losses are pretty wide. So I'm very open to letting them run. Like this NJ position, I have a 200 pip stop loss, and the position size is very, very small. So I'm a little bit more comfortable this time, just seeing what happens.
Yeah, me too. I'm gonna keep holding. So yeah, thank you, and see you on Monday.
All right, man. Talk to you later. Bye.
Talk soon. Goodbye. I'll post the link to the form one more time. So if you want to participate in the DNA giveaway, so let's click copy, paste. Just click on the form, fill it out, and you will get entered into a DNA funded giveaway. If you want to get funded and you don't want to wait to win the giveaway, you can get funded immediately. I mean, you can take a challenge, and you can use the code A1 Live, which gets you 25% off any DNA funded challenge. So let me show you my personal account. This is my 25K two-phase account. This is the second phase. I have passed the phase one. Currently on this second phase, I'm in a little bit of drawdown. I have 3 positions running at the moment. So buy on S&P, sell on gold, sell on euro dollar. And yeah, just around break even. I mean, not break even, minus 1.5, minus 2%, but trying to of course, pass the phase 2 and then get some payouts. I've had a great experience so far. This is a great prop firm. We at A1 highly recommend them. And with the code A1 Live, you can get a great price as well. As far as the rest of the markets go, so Euro Swiss running in profit. These are all of my positions, by the way. Oil, break even. UJ going back to the initial level, and euro dollar is sort of around break even once again. Yeah, pretty much the sort of all of the dollar pairs seem to be going lower. GU, definitely a big reversal. Right there. Stock market is looking really bad. Which is the worst one? Let's see, probably the DAX. Yeah, the DAX. Absolutely. I mean, this just goes to show you what the ECB is doing. They are killing the economy. Possible higher interest rates. Yes, it's going to keep inflation under bay, but your economy is already screwed up. So look at the German stock market. We are now back at the levels from February 2025. And there's no sign of stopping. I mean, we have just broken a key level of support. I would say sort of this area in general. We have broke it. If we continue lower, we can slide a lot more. So, and it definitely doesn't help that the ECB is looking to hike interest rates. That's why I have quite a lot of confidence. Again, it's not a guarantee. This position can absolutely take me out for a loss. But looking back at all of the prior data, looking back at this small study, every time, in every instance where the ECB hiked into an oil energy shock, euro dollar was lower 2 months later, okay? So the market typically prioritizes growth outlook over nominal yields during a supply shock. Essentially, market focuses on growth, on GDP growth, and not on actual inflation numbers when pricing the euro as a currency, for example. At least that's what history is telling us. This time could be different, yes, but that's not how trading works. Trading works, you look at what happened most of the time, and you expect that to happen again. If you had, for example, 3 oil shocks in the past, ECB hiked, and all 3 times price of euro dollar dropped, there's a very, very high chance it's going to happen again. But there's always a chance it doesn't happen, okay? It's all about the probabilities. For me, absolutely worth the risk. So Warlock says, Nick, is there any Forex fundamental book for beginners? So Nick is not here at the moment. My name is Marco. I'm a guest on the A1 show, but I'm going to answer your question nevertheless. So as far as books go, I think the best one that kind of captures everything you need to know is Alpha Trader, Brent Donnelly, or you have Market Wizards, Jack Schwager. I think that's how you spell it. I'm not sure. If you read these 2 books, you don't need to read anymore. In my personal opinion, you need to jump onto the markets and start learning a strategy, learning an edge for yourself. Of course, hopefully not with live money. But yeah, this is kind of the Bible, especially Market Wizards, the Bible of trading. And then you have Alpha Trader, which is a less known book, but has everything you need to know. Alan says, Day Trading and Swing Trading the Currency Market by Kathy Lean. Fantastic book. I think is slept on, includes both technical and fundamental analysis, also strategies. That's probably a great book as well. I haven't read it, but I'm sure it's great. Any thoughts on the FTSE? Okay, let's take a look. This is the UK stock index, bearish, really bad. You know, everything is in the dumps. If you talk equities, it's red. See, everything is in the red. So I'm not seeing any signs of a bullish sort of pause or a bullish momentum. For me, staying away from stocks, most of the traders and experts that I'm following and reading from, they're bearish, especially in the upcoming 1, 2, or 3 weeks. I think they're even placing shorts. So most of them are selling stocks for sure. It's not my play. I don't really have access even to selling specific, let's say, stocks. Maybe I can sell indices, but I don't want to do it. I'm playing risk off. Essentially, right now it's either risk on or risk off. Anything you buy on this list is gonna move up or move somewhere with risk on or risk off. So if you sell EU, if you sell GU, if you sell AU, if you buy US oil, you're positioned risk off. It's the same thing as selling the S&P, right? So the correlations are extremely, extremely, extremely high at the moment. Is Alan coming on? Alan was just here, but you can catch us again next week on Monday. Brent is a wonderful guy. I've listened to some podcasts of his. Yeah, very knowledgeable, absolutely veteran trader. He knows his stuff. Get ready for Friday sell-offs. Yeah, looks like we have definitely got a Friday sell-off. I'm a position trader and I never take sells on gold. Would you say a break above 52? Two things that I would personally wait for gold. Two things, okay. As far as levels go, 4,200, 4,100. Let's say this general level, and a bullish reading on the EdgeFinder. Those are the two things that I personally need. Giveaway is right now, so let's do the giveaway. Let me grab all of the names from the submissions. Today is the 20th of March. By the way, it's a 10K one-phase account. Okay, we have it here. So let's copy all of the names, put them in the wheel, spin, let's see. So, Anne, yes, Anne J, congrats on being the winner. After the segment ends, I will send you an email with the free 10K one-phase account for DNA funded. If you didn't win and you want to get funded, like I'm trying to, so this is my personal DNA funded account, definitely make sure you use A1 Live code for 25% off. Okay, A1 Live, 25% off. When is the giveaway? Okay, you're referring to the EdgeFinder giveaway. I'm not sure about that. Just keep following the A1 socials. I'm sure there's going to be a post about it. Yeah, no worries, Warlock. The hike rumors are disorganizing the markets. It's hard to tell if you're in the right side. Today you're selling, tomorrow you're having rumors of a hike. Well, it's tough. It's tough to navigate, but markets are always hard. In my experience, in the past 4 to 5 years of trading, it was never smooth sailing. It was always hard to get a bias. What is good at the moment is volatility is high. If volatility is high, that means trends are happening and you can make some profits. You can make some percentage. That's what's going on at the moment. So volatility is definitely high, and there are profits to be made. You could be buying the dollar, buying the DXY through selling, of course, selling EU, selling AU, selling GU, USD CAD, or not USD CAD, but buying USD CAD, sorry, and possibly even buying oil, stuff like that. Yeah, oil just not doing anything at the moment. As long as the Strait of Hormuz remains closed, oil should keep on climbing higher. That's what I'm betting on. That's why I have a long position. Okay. Marco, did you see my annual trade worked out like a charm to the pip? Okay, awesome, Sluggy. I didn't see if you sent me any last updates in the messages because I didn't check them yet, but congrats on the trade. I know you were in it, so that's awesome. Joshua, hello, welcome. Did you get into your UJ short? Yes, I'm still in. I didn't get out though, so I'm still in. It's probably going to be background break even. We had a massive drop yesterday, running some pretty decent percentage, and then unfortunately complete reversal today, but it is what it is. Yesterday, GU did a rug pull on sellers. It was so crowded. I was short GU too, but got completely wrecked. I mean, yeah, GU tough move. I mean, look at the explosion higher. That was crazy. It was probably because of the because of the hawkish central bank, if I'm not mistaken. All of the central banks, you had a bunch of meetings this week. Let me just show you. Like you had Australia, you had Canada, United States, Japan, Switzerland, UK, which was yesterday. You had the ECB as well. Most of them turned out to be pretty hawkish. So today looks like we don't have anything, but yesterday was a big one. Yesterday was super active, and you definitely saw that in the markets. Look at the moves, crazy. I guess my bet is the same. That's the last thing I'm going to tell you today. I'm selling the euro dollar because the EdgeFinder is short and because the ECB is hiking into an oil shock. But guess what? Australia is doing the same thing. The UK is planning to do the same thing. That's bad. That's actually bearish for the currency. That should be bearish for the underlying currency. So the trade that I have on EU can pretty much be translated into every single pair or every single currency paired with the dollar. You don't want to be hawkish as a central bank going into an oil shock. That is just what the history is telling us. So that's about it from me. Thank you very much for watching. You can catch me tomorrow. I'll be streaming every single day. Don't go anywhere because you have Tiger coming on after me. Stay safe. Good luck in the markets, and I will see you in the next one.
This next segment of the live stream is proudly sponsored by the one and only Ola Prime. Ola Prime is easily one of the most impressive prop firms that I've come across with an incredibly professional team. They offer fast payouts within 1 hour, up to 95% profit splits. They have the largest number of trading platforms. I mean, just take a look at this list. They have MetaTrader 4, MetaTrader 5, TradeLocker, DXTrade, MatchTrader, and CTrader all available to their traders. And that's just for the Forex side. On the futures side, they have DX Futures currently with Tradeovate and NinjaTrader coming soon. Ola Prime has one of the widest selections for challenges and funded accounts that I've come across, with a wide range of account balances you can choose from, like 5 all the way to 200K. And just take a look at the variety of different challenges you can choose from to fit your trading style. They have a 1-step or 2-step pro accounts. They have the 1-step prime, 2-step prime, direct accounts, Ola Prime, 1 challenge. I mean, you have a wide selection here. And the reason this is so important is that you as a trader have a unique style. Everyone does. And finding the right challenge to meet your criteria is very important. If you go through their website, which I encourage you to do so using the link dropped in the live stream chat right now, you can explore in full transparency all of the different account types, all of the rules, etc. They also offer news trading and weekend holding, and they have direct and challenge accounts available. For a limited time, stream viewers get extra discounts using the promo code that you see on your screen right now, and also through the link and promo code being shared in the live stream chat. Take your trading to the next level with Ola Prime. Now back to the live stream.
Well, what's going on, everybody? Happy Friday. We've made it. It's a great day by default, as always. It is a nice, quieter day today. We had all kinds of rate statements all week. And you get a rate statement, and you get a rate statement. We all get rate statements. But, yeah, it's just nice to have a nice, calm, cool, collective Friday for a change. We really only had a couple medium impact events. Having a look at the calendar over here, really kind of headlined by Canada. I mean, they did have some not so hot retail sales data come out. Now, as far as the regular month-over-month number, their previous number was in the gutter, so it was nice to see them pop out to the positive side, but it didn't quite meet the economists' projections of 1.4. So we'll settle at 1.1 for that. Not really a ton of change that I saw of immediately looking at the dollar CAD when it did come out. We can go have another quick look at it over here. But yeah, today is just mainly all about the geopolitics and seeing what, unfortunately, what next missile hits what. I do know as far as market drivers for the day is what I'm specifically talking about. But just of note, yesterday there was a missile strike on the Bazan refinery, which is the largest one in Haifa, largest one in Israel. And as soon as that happened, we actually flew over $100 a barrel very briefly. We're talking about this candle right here. I think, about 125, I believe is what it came up to. But then the post-strike, we call it the battle damage assessment, I guess you'd call it. It turns out nothing major got destroyed, just some minor stuff, nothing too crazy. And as soon as that news came out, oil dropped back. Okay. Remember, it's thriving on chaos right now, much like gold and silver likes to thrive on chaos. There's a lot of chaos. So needless to say, oil, liquid natural gas, I mean, those are really kind of front and center right now as far as the big movers and shakers. But anyway, all is well. It did come back below 100 as far as WTI, West Texas Intermediate. What else did I write down over here? I'm keeping my eye out for the COT report that we're getting a little later on, guys. Remember, that always does come out for us, usually right at or right after the end of Friday trading. It's always accurate as of Tuesday, so just keep that in mind. Let's go have a look at the old news that we do have over here. Yeah, if you guys remember, the Nasdaq was the big winner from last Friday's report release, which again is accurate as of 3 days prior on the Tuesday. So it's obviously lagging data, some of the most lagging data we get, but hey, it's still nice to know where the big banks and institutions are positioned because they make all the money, right? So whenever they jump, my only question is how high do you want me to jump? So this is not the end all be all, but it is a very important indicator of items that we will see over here ultimately on the top setup. So yeah, just in looking at that though, Canada oil of the last reports were up nicely. They did scoop up quite a bit of that. As far as Canada goes, they did it by just more so getting rid of short contracts. So that in itself is quite the bullish spike, the bullish narrative for oil, for Canada dollar. Sorry, guys. And really the same thing for oil. They just basically got rid of a lot of shorts. They did add a lot of oil contracts last week. And then they did get rid of a few Canada contracts. But because of the shorts that they overwhelmingly got rid of, that's why it was a net change positive of 5%, 5.5%. So I'm interested to see what we got. I would imagine we'll probably see some more spikes up on those items, especially the oil, the chaos instruments, silver, gold. We'll see what that all comes out to be. But yeah, looking forward to that because this is one of the big reports for me, guys, that I like to look at, especially over the weekends, just to see what could potentially be getting the push up. Right, the banks are putting in large orders. This is telling us that they're getting in, pretty decent orders on some of these net change long assets. Same thing for the reverse side. Okay, they did sell off hardcore on the Nikkei last week, so. Anyway, it's just nice to be able to ride their coattails and kind of get an idea of where they're putting their money. So that's enough of the COT. What else did I put on here? Yeah, thin eco calendar. I already kind of showed you that. Dollar CAD. We'll just take another quick peek at that. See if it's moved at all since the last time I looked. And that was 7:30 my time, so 8:30 Eastern. So yeah. Okay, so we did kind of consolidate. We did push up some of these smaller supplies I was looking at. And yeah, the Canada weakness starting to show just a little bit. Nothing too crazy. It's moved about 20 pips upwards. So that's 20 pips against the Canada dollar relative to the US dollar, which obviously is pretty strong. The dollar overall did really like the FOMC speech and statement the other day. I mean, it just continued to go up and up. Going back to the Wednesday candle right here on the daily. Actually, it'd probably look better if I put it over here. Let's put it over here. Yeah, right in. Oh, I'm sorry. I'm looking at the wrong instrument. Let's go to the Dixie. That's where yeah, here we go. I put my line over here. So just looking at that 5-minute chart, we'll just kind of go back in time just a little bit. Okay, this is where they did release the statement on our economic calendars. And as you could see, it just flew up as Mr. Powell started and continued flapping his lips and then kind of has based out and retraced pretty much all of it and then some going into today. So we're pretty much about where we started whenever the release came out. So big spike up, sell off, another spike up, back to the midpoint. So there's your Dixie for you. It is still currently the strongest currency on the macro scanner, Eco Surprise Index, sitting there at 72%. So basically 3 out of 4 high impact releases have been bullish, have exceeded expectations. Taking a look at the dollar from a heat map perspective, there's really only one blemish in the last 7 calendar days, and that's the GDP, where we had basically it came out half the size of the forecast at 0.7%. But other than that, hey, the PPI was pretty good for the dollar. The PCE, the Fed's favorite gauge, neutral reading, they nailed that one. But other than that, you had a couple good employment numbers come out. Jobless claim, the jobless claims was just a little lower, and of course the JOLTS job openings was about 200,000 more than forecast. So that's a look at your dollar. Still looking pretty nice and strong. And then of course we got the New Zealand dollar in the cellar, missing some expectations of late. So that is our new weakest currency from a fundamental perspectives. Zeus, which time frames do you use most for your analysis? So for me, I like to have my daily chart on the right, because the reason I have my daily is because I want to follow. For me personally, this isn't for everybody, but just for me personally, I want to, number one, I want to see if I got higher highs, higher lows, or the opposite. Number two, I like to look at an 8 EMA. That's an exponential moving average, kind of favoring some of the more recent price action. I want to make sure that 8 is above the 21 EMA if I'm looking for longs, and vice versa for shorts. So this is really where it all starts, seeing my trend and then confirming with EdgeFinder if it's going to give me permission to follow the trend and see if I can get a discount and find a pretty decent zone of demand where some potential unfilled orders lies. So daily on the right, and then I will I will hop up to a weekly as well sometimes, just to see if the weekly is in line as well. Remember, the higher the time frame we go, the more accurate it is. That's just the way it works. The lower time frames is where it starts getting noisier. But anyway, daily on the right, and let me know, guys, if you have any specific assets you want me to look at. I have not placed a single trade this week, guys, just because I've been so busy onboarding with my new role with FX Empire. My brain has been absolutely fried by the end of the day. It's a 6-hour gig, but I'm a workaholic, so I tend to make it more. And then the end of the day, my brain feels like it's running laps all day. So needless to say, I've been not getting into trades at all this week, but I have set quite a few alerts, which we'll get to over here in just a second, just to get an idea of how they performed. Some of these alerts hit while I was asleep. Some of them hit while I'm in the middle of making videos and shorts for FX Empire. So I just have to do a trade. So anyway, just to finish my time frame though analysis for you, that's where I'll step over here to the 4-hour and start looking for demand and supply zones. Okay, I like to see them on a daily chart too. Let me turn this off for a second for you. I like to see them over here as well, starting with a daily. Hey, where do I have a consolidation where price left in a hurry and left us a big, ugly, big, nice looking gap? It's not ugly. It's nice. I like gaps. I really love gaps because there's typically unfilled orders on the opposite side of it. So anyway, daily for trend, 4-hour for demand zones and supply zones. And really, I like to just kind of look for a confluence, daily and 4-hour demand supply zone confluence. When price enters those zones, if it's a good discount, if it's a good premium, if I'm trying to short sell, so long as it's in line with the EdgeFinder, which is my boss, that's my self-professed boss, and it's giving me direction from a fundamental and sentiment point of view, I take those trades. So it's not necessarily a whole lot of limit orders. I do a lot of market orders, but it's just because it's higher time frames. So it's not like I'm trying to get an exact price. If you're a scalper, obviously works a little, refresh my screen. Let me refresh my screen 1 second.
Tiger, your mic is muted.
Sorry, guys. Let me turn my mic on. Anyway, so yeah, back to it, guys. Sorry about that. Yeah, just to finish up the piece on time frames, it really depends on what kind of – it really depends on you. If you have a full-time job and you can't be looking at a chart every 15 minutes, daily 4 hours is good. Because think about it, a four-hour chart should typically mean you really only got to check it every 4 hours. If you're trading a 1 hour chart, that typically means you ought to be keeping an eye on it hourly, 15 minutes, every 15 minutes. That's kind of a rule of thumb, guys. So for me, I stick to the higher time frames because for the most part, that's where the big boys are trading, and I want to ride their coattails. So that's the time frames. But anyway, getting back into some of my alerts. Yeah, that's quite the number, John. Trump economics, Iran war have wiped out $500 billion of the U.S. stock market today. Yeah, I mean, if you look at that number every day, you tend to see quite the big number, maybe not necessarily that high. So it is a big, gigantic, scary looking number, but look at it from day to day. You'll see that that's kind of the reality of the markets. Look at the currency market. You want to talk about daily turnover. What are we up to, like 9 trillion or something like that now at this point? Which engulfs, think about it, guys, Forex, the FX market, the daily traded activity volume amount is bigger than the stock market, the futures market, the crypto market, all the markets combined. Gigantic. So anyway, yeah, I think we're up to 9 trillion, but nevertheless, I digress. I wanted to take a look at some of my alerts I've got over here. Again, I haven't placed any trades, but I have still been keeping track of some zones. So we'll take a quick look at these and see how they're performing. But yeah, let me know, guys, if you have anything else you'd like me to look at real quick. So yeah, we are currently in a pound Swiss demand zone. I'm keeping an eye out. Now, I don't remember. Does that pound Swiss? Yeah, so we're still getting a +6 on that. So we're looking good there. This is a 4 hour chart. So on a 1 hour chart, I just want to see, and look at this, guys. We bounced into a 4 hour, 1 hour, or no, I think that's 15 minute. This is all kinds of confluence because the 4 hour candle is about the same height. It goes up here, the 1 hour as well. But coming down to a 15, guys, you see I'm looking at this little candle nestled inside. And if we can drop down just a little lower and tag that, I might be looking for a long today. But of course, it's Friday. I don't personally want to be in a trade when the end of the intraday session closes. I want to be the F up out of there, if you know what I mean, because I ain't trying to take a chance on getting a bad, ugly Sunday gap from more Iran, Israel, U.S. strikes, depending on the asset. If it's Bitcoin, I'm okay with that because at least I know I can close it right away. Kind of like this past weekend. I did have that nice winner on Bitcoin, and fortunately or unfortunately, it's pretty much carrying my week, even though I haven't been able to place any other trades. So, but anyway, yeah, I'm going to keep an eye on this because that is a nice looking base and candle there. So if we go forward, okay, we're actually touching it now. So I've got my RSI below my 20 line. Let's go to the 1 hour because that's ultimately the one I care for the most. Okay, so the 200 EMA is still just a little below it. We've got also a former potential support resistance line going through the zone. That's that blue dash line. And RSI is helping me over here as well. So I just really would like to see it. I wished it would come down and tag that 200, but depending on how it closes. Yeah, this candle just started 5 minutes ago. So yeah, depending on how this candle closes, if we can get a close like, to the upper end of this previous candle, this big ugly red candle, then I may just look for a breakout here and just put a stop loss below the 200 or fill in the rest, put in the stop loss below the rest of that demand zone there. That's the only one I'm currently keeping an eye on, but just taking a quick look. I was looking at some others. Oh, that's Amazon. Well, Amazon, same thing. It's not a currency, obviously, but it did drop into a zone. Let's go look at pound Swiss. Okay, pound Swiss. Well, that's the one I just looked at. Oh, I got it up here twice. That's why. Kiwi yen. Let's try this one. 93.03. That's where I had an alert hit. And on this one, I'm obviously looking for oh, yeah, it's this supply zone up here. So look, this one's pushing pretty nicely off this overhead supply. Another one that might have been a potential good short. Pound New Zealand, same thing. I had a demand zone down here I was watching. Looks like we got a nice push away from that. I like it. Euro Kiwi, this one dropped a little deeper, depending on how I did my reward risk. Yeah, this might have tagged me out had I been in this. Let's measure that for you real quick, actually. Okay, so that's 118 pips. 118 divided by 2 is 60. Okay, so yeah, I would have still been in that trade, actually. Yeah, because see, my 60 pip stop loss would have taken me down here. So that turned out to be a good trade as well. Euro New Zealand. Okay, so let's look at, dollar yen. Here was another demand zone that I was keeping an eye on. I think I wanted this one I was trying for a second chance. That's why. So yeah, this one bounced off the demand zone nicely. This is another trade I could have been in, damn it. Euro dollar, 100 or 115 even. Yeah, that one probably didn't look the greatest. Yeah, that would have definitely been a loss. Pound Aussie over here, 189.84. Okay, looking for shorts up here. We did hit that confluence line you see there, getting a nice push off. It's a little lazy though. I would have probably just cut this one with a very tiny break even, or maybe just a few bucks win. US oil, I was keeping an eye on this little tiny zone over here. Oops, I'm wrong chart. This, come here. Oh, I got to reset my screen. No wonder. Yeah, I was looking at this demand zone over here. This one did end up winning, or potentially would have won. Keeping an eye on this 15-minute zone right here. So we bounced in that nicely. That would have been a nice profit. Yeah, I should have been in some of these trades, guys. I'm not even stunting. Aussie yen, looking for a reset my chart. 111.93. Yeah, that one would not have worked out. So hey, I should have been in 3/4 of these trades this week, but I was so busy I couldn't even get into any of them. So there you go. See, guys, even when I'm super busy, even if I'm not getting into trades, I still want to map out my zones just to see if they would have worked out or not. So I would say that was a successful week. So I'm going to try hard. I might even have to start getting up a half hour earlier just to have more time, because the first thing I do at FX Empire is I write up about a 5 to 7 minute news piece, and then I make a couple shorts from that. And then midday, so after I finish with you guys, I'll hop on a meeting with the guys and do another midday recap, followed by a couple more shorts after. So more to come on that. I think we're going to start doing some interviews, maybe even some other stuff down the line, but I'll let you know at that point. Check euro dollar, says Daniel. Let's have a quick look at that for you. Euro dollar, of course, as a reminder, has given us a -7, so it is in line with the trend for a short. I did draw up over here. Well, number one, 8 is below the 200. I like that. Or I'm sorry, 8 is below the 21, so I like that. Now, the one potential issue is we've bounced into this demand zone down here. Okay, I just scroll to the left. This is actually a 4-hour demand. So we have definitely gotten a bounce from that. I mean, there's no denying that. But by the time it gets up here, that's basically 100 and something pip bounce. So at some point, I would think it would want to catch its breath, especially because the dollar is still quite strong right now. Remember, it's the number one strongest currency from a fundamental perspective. Now, the euro is too, though. It's up there. Okay, euro's a 60%. So it's performing pretty decent. It's just, in my opinion, barely making the cut of, hey, I want to go buy this currency. So, for that. So when it comes to shorting the euro, I just don't personally like shorting on currencies. I know the dollar is stronger, and I know we're getting a signal on EdgeFinder, but if I were to get in this short sell up here on this supply zone, I would be pretty strict with it, because, if you got 2 strong currencies or 2 weak currencies, then what do you think they're possibly going to be doing? All else being equal, could just be going sideways. So the whole goal is, capture something like the Kiwi, match that with the dollar, because the Kiwi is the weakest, dollar's the strongest. Go out there and try to find a place to short the New Zealand US dollar instead of the euro dollar. But hey, it's a signal nevertheless, okay, because of all the other indicators. That's why we look at EdgeFinder as an aggregate, right? That's why we don't only look at fundamentals, although I think it's the most important part. We have to factor in the sentiment, the technicals as well, to time it. So I did draw up this supply zone up here. It looks like I drew up a 1-hour zone. nice gap out of that, and then it broke structures. This is what I like to see. So getting closer to current. Oh my goodness, I'm hitting buttons. Reset. And I think we actually, yeah. So see, we got close to it, but it's just turned and went the other way. So the way I see it on euro dollar, just to finish this out for you, you're asking about AAII. Yeah, let's take a look at that here, and I'll round out. Yeah, we'll look at that in a second. So anyway, so the way I see this is we did have an about face, if you will. Okay, just pulling out some military terms, and then we had a big push down. So there's definitely going to be some buy orders sitting right there. Buy orders because of these short sellers leaving their stop losses. And what does a bank, an institution need for their large order? Okay. If they're trying to sell up here, they've got to have a load of buy orders. Anything to help them out. If they don't have liquidity, then they put in one little, what they would consider a little position, and it's just going to fly downwards and give them a horrible fill. So if I'm a bank, okay, again, I just try to think like a bank. I like to see this because it tells me liquidity, not to mention the unfilled orders from the supply zone. I think that might be a possibility right there. Okay. As always, not financial advice, but if I were to put my money on it, I wouldn't put a full position. I would just put a partial position, and really mainly because the euro is, a decently strong currency as well. You asked about the AAII sentiment. So if we go over here to crowd sentiment, obviously we got 3 different items over here looking at the crowd sentiment, guys. We got the put to call ratio, which is, I know, one of Nick's favorites because he shows it quite often. And it's my favorite too. One of my favorites too. But, and then the retail sentiment, looking at what the average Joe and Jill trader sitting at home on her laptop is positioned, how they're positioned in the market. But then you get into the AAII sentiment. So I would say this is more of a forward-looking indicator, which is what we like. Okay. When it comes to the EdgeFinder itself, and I'll come back over here in a second, there's really only there's 4 or 5 of these indicators up here that are more forward-looking, and a lot of the other ones are more, lagging, if you will, or just the real data, but just a little on the lagging side. So forward-looking indicators include things like the JOLTS, include things like the PMI data, purchasing managers indices, the consumer confidence, right? So when it comes to the AAII survey, it's kind of that same thing. It's saying, hey, it's asking and polling traders the next 6 months. Hey, over the next 6 months, do you think the stock markets are going to go down? Are they going to go up? Are they going to go sideways? Okay. So 6-month period. This is what they're asking. Now, we are very bearish. The retail traders, the traders, I should say, are quite bearish. They're saying 52% of them think that the markets are going down. Tiny bit in here, which is neutral. And then you start looking and seeing 30% are bullish on it. So if we see 52%, which I think, I don't know, Nick and James, that might be the highest reading I've seen since I've even had the EdgeFinder. This is overwhelmingly saying, hey, if they're short, if the regular trader is short and they actually go and fulfill that plan, they're shorting, which means what? That means contrarian signal. That might make me a little hesitant about going out and shorting a Nasdaq or an S&P, right? It's also saying that they're going to go place their positions and they're going to leave their stop losses above their orders. So that's going to tell the market, that's going to tell the big boys on Wall Street, probably going to be a lot of buy orders ahead. So, possibly we could go and sweep some liquidity, push prices the opposite way. So that's just kind of the way I see the AAII survey. Nick's way better at explaining this stuff than I am, but it definitely shows you which direction the market's going to understand where potential liquidity is. That's kind of the way I look at it. And also to say, for me, I don't know that I want to be putting on some short trades on some of these indices, at least for a long period of time, maybe a short period of time, but definitely not a long period of time. So hopefully that helps. Again, it's a 6-month out, more of a forward-looking indicator. It's a really good one. So anyway, guys, having said that, gosh, it's already my time to get up out of here. Yeah, that's all I got. Closing pictures in, slam the door shut. So ladies and gents, have a good rest of your Friday. Be careful. Be very careful. Avoid those Sunday gaps. And we'll be back next week.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.